everybody. It's Stock Traders Talk Radio Show. We interview the CEOs and stock spotlight picks to keep you in the know. With your host, STT, Cap, Hall, Nickel, Tipakia, Murray, Stock Sumo, and the easy on the eyes, also firing Cutie Cow to keep the guys in line. I'm the Money Badger. So let's get down to brass tacks. My objective is to make you greenbacks, aka stacks of cash, and to turn your portfolio green with our DD and research team. So without further ado, STT Radio. Let's go.
Good evening, stock traders, and welcome to Stock Traders Talk Radio here on a cold and rainy Sunday night, February 19th, 2012. I'm your host, STT. Joining me on tonight's program, I have Kia.
Aloha, STT. Good to be here on a Sunday afternoon with you, as always.
Oh, it's great to be here. Starting the week off right once again. How was your couple of days off?
Did we have days off?
Yeah, I know. How do you feel? Oh, boy. Also, joining me on the program tonight is QT Cal.
Hey, Mike. How are ya?
I'm fantastic. How about yourself?
Doing great. Ready to get the week started.
You ready?
Oh, yeah.
You sure?
Absolutely.
Well, that's good to hear. Also, joining me on the program tonight is Hoss.
Hey, guys. What's going on tonight?
What you doing, Hoss?
Not too much. Been a weekend full of hockey and work.
Yeah. And work.
Doing well. Excited for the show tonight, though. And the upcoming week, for that matter.
Oh, yeah. Big week coming up here. Big week.
Oh, yeah.
Also, joining me on the program tonight is Mr. Cup.
What's going on, Mike? How's everybody doing?
I am good, sir. How about yourself?
Great. Doing great.
Yeah, that's good to hear. Don't forget, this Wednesday night, the 22nd of February, big CEO interview with GRDO. We're all looking forward to that. A lot of buzz about that one. We should have a full house that night. That's for sure. Now, tonight's show is going to involve a couple of stock spotlights. And to get us started in the program, I'm going to turn it over to Mr. Cup.
Thanks, Mike. So you guys know stock spot.
Hey. Hold on a second.
Yeah.
Hold on a second. Cop?
Yes.
Did you just not hear Money Badger's song where it says QT Cal keeping the guys in line?
I did.
Okay, well, I'm going to have to step in because I think I'm going to take this over.
Really?
Our stock spotlight tonight, yes. I'm feeling a little feisty.
All right, bring it.
I'm feeling a little feisty. I've got a little information on our stock spotlight, so if you don't mind.
No, clearly I don't. Go ahead.
Right.
Give me a break.
Let me start the show all over again.
Oh, okay.
One second. Doing our spot, holy Jesus. Sorry, people, 4 hours of sleep last night. Doing our stock spotlight tonight is QT Cal. QT, take it away.
Thank you, Mike. Okay, well, I figured I'd give you guys a break tonight. So we have our stock spotlight, which is RTG Ventures, Inc. Ticker symbol is RTGV. It trades on the OTCQB. Now, I went to the OTCmarket.com website, and it gives a business description. Business description is RTG Ventures is a technology company building disruptive products for the digital media and mobile payments industries. RTG technologies combine to create a social-enabled micropayments platforms that use events to monetize content. Now, if you're like me, I'd like to break it down into layman's terms because I'm looking at this going, what is this talking about? I have no idea. Okay, so what's nice is that they give you the contact information. They give you a Washington, D.C. address. There is a website for rtgventures.com, which I will say that we'll be referencing a lot this evening. But I really like the breakdown on the website. So again, the website is www.rtgventures.com, and the welcome gives RTG Ventures as a company with a unique model that enables live music video rights owners to control and monetize their assets through internet and mobile internet distribution. RTGV also enables destination site owners to source top quality media content without the need to negotiate rights for each media item they stream. So this makes a little bit more sense to me in regards to what this company does. So basically what they're doing is they're trying to make it easier for rights owners to control their information, to control what they have the rights over to their content in media and multimedia platforms, and not have to worry with all the other things that are associated with it, like the legal aspects, the issues surrounding all these individual items when they go to live stream. So what it's doing is it's packaging this in a ready-to-use format that takes the onus off of the rights owners. So let's get into that a little bit more. There is a portfolio here for RTG Ventures, which is pretty interesting. In looking at it a little bit further, they have operating divisions. They have 3 operating divisions. The first one is media systems, which is technology to monetize media assets. The second one is payment systems, which is technology to take and administer payments. And the third operating division is solutions, and this has to do with their marketing, their sales, and other services that add value to the total product that's being offered. Okay, so let's just look at the media systems portion of it. The big one under this media systems division is the cloud channel. So we will go to services under RTG Ventures. And basically, it has 3 things that it actually provides under the cloud channel, which is the production services. So they're handling production services, they're handling digitization, and then they have this whole separate entity called the cloud channel. Okay, and it is a wholly owned subsidiary. So with that in mind, let's go ahead and look at the cloud channel. Basically, the cloud channel is a web-based app that changes the way streaming media is monetized online. It disrupts traditional blanket media license model by providing media rights owners the tools they need to mass syndicate content themselves. This ensures that they get paid for exactly what gets played and gives them a far higher return than they would hope to get using other things such as YouTube or other destination sites. Okay, and payment methods and micro rights management tools are integrated into such stream, allowing for totally transparent royalty audits in real time. Okay, so with that in mind, we go into the payment systems, which I had a little problem with this. They did have certain specific areas like Paylogy and iPayU, and every time I try to go to research and get an internet website, I came up with nothing. So that was a little concerning, but what I did see is that recently they had a 10Q on January 17th, 2012. So it was the quarterly report, and that operating division has undergone some changes. So let me just go right to the 10Q, which you can find on Yahoo Finance or other avenues. It is the Payment Systems Division. It says the company intended to roll out a disruptive mobile payment platform built on a full banking system through a joint venture framework with UK's International Financial Systems, IFS. Due to the growth in this sector by internet, media, telecoms, and credit card companies, it was decided that the level of investment required indexed against the growth by competitive providers would leave the company exposed with a product that would struggle to progress in a highly competitive, well-capitalized commercial environment. The joint venture between the RTG Ventures and the International Financial Systems, IFS, was mutually set aside in November 2011. Coincidentally, the Payment Systems division has been eliminated. So that particular division is no longer applicable right now. Okay, so we go to the third one, which is the solutions. We have the marketing and sales division and the other services that are provided under RTG Ventures. This specifically is the company Digital Clarity, which is a wholly owned subsidiary as well under RTG Ventures. In order to find this information, you can go right to the website, which is digital-clarity.com. Okay, and this is important. This is a great aspect of the business because this, right now, where they're at as a company, is going to, it looks like it's going to be the really big bang for your buck in the company, as we would say, because this is where the revenues are coming from, and this is where they're focusing their efforts right now. So if we go to digital-clarity.com, which is the website, we can give an overview of what this wholly owned subsidiary under RTG Ventures actually does. What we do, so we can start with their online marketing. So under their online marketing, which again was a bundle package of what they were trying to market to their customers in regards to the technology that they were offering in regards to media assets. What they want to do here, and what we need to keep in mind, is that they want to enhance the assets of those who, the rights owners for this media content. Okay, so they've got the media systems, which will, under Cloud Channel, will go ahead and digitize all of that media to their liking, and they have different packages, which they don't have to worry about the legal and all the legal aspects and other things that trouble rights owners. And then they have the way that they package it and the way that they give the marketing, sales, and other services that will enhance the product and get their product out there. So under that, we have online marketing. They have online marketing methods that can be broken out into two broad areas. They have the customer acquisition, which is the online marketing methods that are primarily aimed at obtaining new customers, either by generating sales or raising awareness of the business. And then they offer the following services under the customer acquisition, which is search engine optimization, SEO, pay-per-click, and Facebook advertising. Okay, so we'll offer all of that in regards to online marketing. Then they have the other aspect of customer retention. What they say is too often that businesses forget the value of having contact with past customers. So what they want to do is they want to make sure that they're using targeted marketing techniques where they can incorporate those to retain customers or previous customers that were involved with the company. So they have email marketing and also social media and PR. And we all know how incredibly huge social media is nowadays. It's everywhere. Okay, so that's the first thing. Their social media and PR, I mean, that's self-explanatory again. They want to create a positive online reputation. They want to help squash negative opinions about the business, connect with the customers on a personal level. That's so important. You know, the key to retention is to always connect with your customers. So that's a really high priority in regards to the social media and PR aspect. You want to discover a low-cost alternative to traditional marketing forms, improve the ranking and search results by linking your business to social media sites, keep track of what competitors are doing through their social profiles, and easily reach your target customers based on social networking site data. So this is what they bundle under their social media and PR services. They also have, in addition to that, training and consultancy. What's really interesting to me in regards to this is that they do extensive training on a variety of skills, including the SEO, the search engine optimization, and PPC, that can, which is the price per click, which can help the business adapt to the complex digital environment. So they offer those training and consultancy applications as well. The design and development, they have planning, design, development, and manage. And they break it down into all 4 categories. They help their customers realize their ultimate goal in reaching as many customers as possible. They want to be detailed in the planning. Their design has to do with creativity and the form and function, and design is the heart of the site. So they want to make sure that they incorporate that in their design. There's also the development aspect. Does your website do exactly what you want it to do? Very important aspect of that. And then managing. Once it's all up and running, it looks like they do the follow through, which is important to, getting your customer base and getting people to pay for a service that probably is pretty important to them. So managing that, doing follow-up reviews, those kind of things to see if they're getting their bang for their buck, so to speak. Okay. All right. Now, with that, they have also the SMS marketing. That's the last thing in their digital clarity. The users of an SMS service can exchange text messages, and that's big because we all know that mobile apps are the way of the future. So they're taking advantage of this. They want to create that platform that's sensible for the business to consider using. They want to make sure that they're getting that aspect of their business in the marketing aspect very, prominent and visible. So you could see that they offer those SMS marketing services. So Digital Clarity is a wholly owned subsidiary of RTG Ventures, and this, right now, where the business is exactly the most important aspect of this business. So what has happened over the last year or so in RTG Ventures? Based on looking at their 3 operating divisions, you would say, wow, this is pretty neat. There's an all-inclusive business here. And what I see here is that they're allowing rights owners to be a lot, to kind of rest at ease, do what they do best, and allow them to kind of take over all of the other headaches that they don't want to deal with. So they still offer a pretty well-formatted media systems coverage, and the payment system sounded like a good idea, but then again, like we talked about earlier, it was discontinued. And then the software and services, or the marketing aspect, where we rely on Digital Clarity, which seems to have a pretty oiled machine there, and you can definitely check that out on the website. So if we look at the 10Q on January 17th, it looks like, again, that we have the payment systems division going away, okay? Then it focuses on the media systems division, which was 4 separate yet complementary businesses. The cloud channel, which we talked about in regards to media systems, which is their niche under the media systems division. And they had other areas, ArchiveGo, Flowcaster, and Audigist. Now, Audigist is a new thing, and we're going to talk about those PRs that we just saw in the last month and a half. But Cloud Channel was the lead platform, okay? And under that, it was outsourced to a company based in the Ukraine. After a series of late development cycles and major changes in the need for a turnkey monetization platform, it was decided to bring the development of this technology under the stewardship of RTG Ventures, digital marketing company, Digital Clarity, a trading name of Styler Limited. So what we see is that maybe there were some issues under Cloud Channel and how it was being managed. Obviously, it was outsourced, so that seemed to be a sore area for the company, and they decided to regroup, bring that under RTG Ventures, and also under the Digital Clarity umbrella, which is the wholly owned subsidiary of RTG Ventures. So that, in a sense, could really straighten out or get some of the the kinks out of what has been going on with the Cloud Channel, because it sounds like it could be a potential huge revenue builder for the business. Okay, so with that in mind, we also have to look at some of the strategic things that have been happening under the management of the company. It looks like that let's just go over some of the concerning issues of shareholders over the past year. One thing that I realized under doing some due diligence for RTG Ventures is that there was supposed to be a company buyback, and it was announced in a PR on March 22nd, 2011. So it was stated in the PR that there would be an effort for company buyback, and part of the reason was that it was because the share price had become an impediment to business, so action is required right now, was basically what was said under the PR. At that time, the share price was trading right around a penny. So what we see is that there was a concern at that time under the leadership of Dominic Hawes-Fairley that there should be some sort of an attempted buyback. Now, one of the frustrations that I saw in researching some of the posts over the last year and so forth was that there was never any follow-up on that buyback. So that tended to be a sore spot in regards to what was important to shareholders. But since that time, on October, right around the middle of October, that time frame, it had stated in a press release or in some of the company's information is that Dominic Hawes-Fairley had stepped down, and this was a reason because of the fact that the focus had moved to a more U.S.-centric approach. So leadership was then assumed under or resumed under Reggie James, who is the Senior VP of Marketing. So we see that happening in October. With that was a shift in leadership and also maybe a new direction in what is important to the company and what their strategic objectives are. So we then see in the 10Q that we have the payment systems division going away, which I believe had a base in the UK. So that might have been under the old regime of Dominic Hawes-Fairley. So that could be an explanation of that. The other thing is that this focus on the cloud channel now being directly under RTG Ventures, again, could be the new format and the move in the right direction. But we do see the focus clearly becoming digital clarity, which is, again, under the solutions operating division. Okay, so with that, we see the solutions division under the 10Q. It states that it's comprised of Styler Limited, Digital Clarity, and Bytemark Limited. Okay, it is a non-material business combination with BMC in order to provide retail support to the merchandising effort. Digital Clarity remains a viable business and is a 100% subsidiary of RTG Ventures. The share purchase agreement with Bytemark Limited has been rescinded by RTG's board of directors and included as an exhibit to this 10K. Okay, the company has also agreed to focus on developing the business of its wholly owned revenue-generating online marketing services company. It has a trading brand of Digital Clarity. Okay, so they want to focus on Digital Clarity. They want to make sure that most of the business is surrounding this effort. Okay, and it also looks at the divisions under Digital Clarity, which we just went over, the price per click, the search engine optimization, analytics, all of it. So we do see that becoming the focus. Okay, is everybody good on that? So now what we look at is what's happening right now with the company. There's been some PRs that have been released in the last month and a half. What does this all mean? Well, looking at where the company's been, it does look to have a pretty good business model in regards to the three operating divisions, even though one of those divisions has been eliminated. It still looks like it has focused its energies on what's important, which is the media systems that they're trying to market, as well as the software and services systems and how to get that, marketing, the maximum for the marketing and the sales that they're trying to drive revenue for their clients. So we see on January 3rd that RTG Ventures and Adara have announced a joint venture on a fan app. Okay, So that was January 3rd, and it says that Adara Media Technologies announced a partnership to exploit concert digital technology for the benefit of the artists who would retain control of their content. The relationship has now identified another dimension for the two companies to pursue, that of a joint venture for the specific purpose of developing a fan application, which will leverage the global diversity to the fan base. A letter of intent has been agreed upon by both parties. So you see that this new or this direction that they're going into has been focusing on media technologies and getting an application together for fans. So, again, we see the mobile apps being prominent as well in the next phase of where they want to go as a business. The next thing that I thought was pretty interesting was based on the past and the things that maybe they have been struggling with is this RTG Ventures is in talks with the strategic merger partners to augment social media offering, and this was on January 26th. Okay, so if we look at that, we see that the company, that RTG Ventures, recognizes the possibilities of getting involved with a private company or merging with a private company could help in some areas that they maybe possibly that they've been struggling with as a public company. It says that in a letter to shareholders last year that they cited that it was one of the few digital technology companies in the microcap public market. The reference was intended to be positive and to encourage value-based investors to acknowledge the opportunity to buy shares, hold, and to grow with the company. So now the experience has now suggested that most digital technology companies are private, and they state that it's for a very good strategic reason. So these private companies, what they're saying is they attract huge valuations in regards to getting venture capital pumped into them to fund the life cycle of the technology development, whereas a public company such as RTG Ventures, it may only come in bits and pieces in regards to how the market fluctuates and the small tranches of cash that are infused into their business. So they're saying that private companies have an opportunity kind of in a research and development format to be able to go the life cycle with venture capital. So they were looking at this as a strategic move to merge with a partner that can help them in this area and that they can join forces with, which seems to be a smart way to handle business. And again, Reggie James and Linda Perry had preliminary discussions with several companies who would meet the criteria and were interested in a joint venture with a public company in the social media space, which could evolve into a merger of like-minded entities. They stated that this bodes well as the digital technology industry is U.S.-centric with global reach. They're looking in often-based San Francisco Bay Area as well as the Los Angeles area in case of media and entertainment operating. So they're looking at the fact that they've spent the last year nurturing relationships in the sector, and that by pivoting, that's what the term that they use in regards to calling making products market ready from inception to the time that they get to the market is the pivoting concept. So they're looking at joining forces with a private company to enhance that capability and kind of to look at taking it to the next level. The very last news that was received by the company via press release was on February 1st. And it says RTG Ventures continues with technology development. Very, very to the point here, it says that in a short statement that Reggie James, SVP Marketing Communications, outlined, it is challenging for our shareholders to see development when a product is not consumer-facing at this early stage of development. However, we have been working deep on a project with a partner that will illustrate the power of Pulse Station. The client has expanded requirements which bode well for the future. He added, our product has the flexibility to move into other arenas which have been discussed at length in recent media reports, and we remain confident about our proposition, market, and future plans. So what that basically looks like is just a follow-up to what the previous PR was stated in regards to them working out a JV or a venture deal with a private company. So right now, it looks like they are headed in a direction that they want to build their business. It looks like their media systems and their software and services systems are very strong. The payment system could have been eliminated because of the fact that there was a lot of executive changes over the last quarter. And so in that aspect, looking at all the due diligence in regards to where the company's been and where they're going, it looks to be bright. And that's pretty much what I have in regards to the DD on RTG Ventures.
That was pretty good, QT.
Sorry.
Holy cow.
Impressive.
Absolutely, holy cow.
Sorry, I hope I didn't. I hope I didn't lose many, but there was just a lot to cover in regards to where they've been over the last year, and also to where it looks like they're headed. And with some of the changes that have just recently happened over the last quarter, you could see that the new management, the new executives are really looking to take it in a different direction. Maybe they're cutting some of the stuff that could have potentially been, holding them down or weighing them down in regards to, to debts and things like that. So,
Amy.
That's the
yes.
big thing. Go ahead, Hoss.
Hi, Hoss.
Hi, how are you doing? First of all, number one, you just killed that. That was awesome. And number two, remind me that you are never going to be any sort of cure for a hangover. Okay. My head hurts so much right now with all that awesome information you just threw at it.
Thank you.
I'm going to listen to this like 4 times to be able to cram all that in my head.
No, that was phenomenal. Absolutely phenomenal. The one thing about this company is I think a lot of us have actually played this company in the past, and it was a rough year last year. It went into a serious assault on promotions while it was up there. The thing that's very attractive, there's 2 sides of this, right? You just came from the one side of the DD where they're going, and I agree with everything you said that that they went through their bad time and they're on the upswing again, no doubt about it. The thing that exists out there is because the stock was higher so much last year, there exists a lot of bag holders in this stock, much higher than where it is right now, which to me, the way I normally play a lot of my plays, I love that. No offense, I don't want anybody to lose any money. However, I know I'm safe in a certain range, so I always look for a low or a bottom play off of those, and when money comes rushing in, it comes rushing in. The key thing to note about that one as well is the outstanding shares is 238 million as of January 13th, and the float was 63 million as of January 3rd, with an authorized share of June 15th. Clearly, that's inaccurate. I think we can all attest to that. I mean, it looks like what happened here is that stock-wise, from a trader perspective, is that the last bit of their convertibles hit the market pretty bad over the course of the last month and drove the stock. I mean, whoever the convertible loan was with, I didn't look at any of that, but whoever it was with is a terrible seller, unless that was actually planned to just drive the living crap out of the stock all the way down to the bottom so everyone can load in a major way, because that's exactly what happened. I mean, they're looking back at the tape and some money value going back in the past year over the course of the last 2 months, there were some big blocks that hit it and just seriously just driving it down as if it was like completely on purpose to the to way below the value of the company that it should have been. And of course, you get the bottom, and it looks like a large group. Many, and you can see a lot of the names, but they ate up a lot of shares down there and just accumulated. And when you go so on the share structure, I would estimate someplace around 320, maybe 330 million shares on the OS, just looking at that. So that would give you an increase of what is that, about 100 million probably. So that's just a guess. I mean, it's going to be anywhere from 280 to 330, somewhere around there is where the stock is at on the OS. And when you see what's trading with it, and I'm going to take you to DD Amanda real quick. Friday it did over $500,134 in volume, dollar value, which was 212 million in a trading range of 14.0014 to 0.0033. But before that, you can see some serious loading areas, okay? On the 15th, 48 grand. On the 7th, 38 grand. On the 2nd, 105 grand, which is, and here's the beautiful part about it. There's 77 million was traded there between 9 and 18, 0009 and 0018. So right there's some of your hits. Then you go back and you got a 25 grand, a 33 grand, a 34 grand, another 25 grand. So they definitely just drilled this thing down pretty good. So as like anything else in the penny world, the big groups come running, right? They start eating up the stock, and because they're holding the stock, you can drive it pretty high. So this can go pretty much as high as they want it to go. That's the reality to it. You know, everything that you said about the fundamentals and all of that, them going in the right direction, agree completely. But, you know, you're going to need to see balance sheets, revenues, audited financials, all that regular stuff here in the near term. And I think they learned their lesson from last year that they're not just going to PR crap. I think there's definitely some stuff there. And, you know, I happen to know the IR from this company, great guy. And you know, plus he's from Delaware, which even makes him better, just so you guys know. But he's one of those guys that, you know, he just believes in the company, works for the company in that sense. So it's they don't pull no punches. They're not. This isn't the type of group. I don't even know if they would ever even do promotion again, to tell you the truth, after what happened last year. But when you sit there and you look at where it's going and those type of things, it's all group driven and fundamentals. Pretty good stuff. What do you got with the chart?
The chart actually looks awesome. You know me, how I'm big on those weekly charts. So the first thing that jumps out at me on a weekly, like you said, I mean, massive volume. It did 280 million plus shares this week, up 130.77% for the week. And, I mean, you look at that RSI, it's at 41 right now. So, I mean, it crosses through that 50. You know, I love that sign. So, and it's definitely pointing left to right, so that's good. Also, you got your PPO coming down, and same thing, left-hand corner to right-hand corner, looking like it's wanting to go north. And then you got your slow stow down there at a beautiful 25.20. So, and it's crossing over. And in the last few times, it's been oversold like that. At the beginning of February, or the end of right at the beginning of February, you saw that it had a nice little run from that 0077 up to that 00187. But what I really would like to see on this weekly chart is to get up through this 20-day moving average, because you look going all the way back to 2010, this thing can't get above it. It tried the once. It closed maybe one session above it, and then it fell, and you can look at that death drop there. So through this 20-day moving average, you got your 50. Next stop is 009. So I go ahead and look into the daily once we've looked at the weekly, so we know that 009 is pretty important once we get through that. And sure enough, you look on the daily chart, that 009 is going to be your 200-day moving average. All right, guys? So they all coincide. And like I said, I got a little bit different settings set on my daily as I do on my weekly. As for my slow stow, and I looked at MACD instead of PPO. They both got nice positive divergence. Again, that volume, you can't help to see that. I mean, the candle's huge on that. And, I mean, we're broke above that 50-day moving average on the daily. And if you take a Fibonacci retracement going all the way back to, March, the end of March, February, like I said, and it took that death drop, you take a Fibonacci retracement from there down to our lows, you got your first, based on a Fibonacci, you got your first real resistance now at around 0.12. Not saying that where that's going, and like I said, you got that 200 right below there around, 869 in that level. So keep your eye on that. I definitely like the way this chart's looking. Another thing on the daily, guys, look at that 20 and that 50. When that 20 crosses through that 50 going down, it's not a good thing. When it crosses up, I'm talking on the longer term. So keep an eye on that, because that's about ready to happen. I definitely like this chart, and definitely put it on the watch list. And that D&D even made me more excited about it. So I'm liking it.
Great. I just want to add one thing, Sissy. That was great. That was a good analysis of the chart. I did forget to tell people that in regards to the solutions with their marketing and sales, they also have signed with Audigist. I don't know if I'm pronouncing that correctly, but the website is AUDIGIST360.com. There are over 900 plus artists that are signed with Audigist, and this is an RTG Ventures company, so you can see a lot of the music that is on this site, and this is a great way to market and get some notice to these artists that are on this website, as well as the Pulse Station. I believe it's pulsestation.tv. I was unable to get the information off the website, but it does seem to also kind of plug into the social media and marketing side of the business. And I just wanted to throw that out there because that's also another avenue of taking the company RTG Ventures into the next platform or in the new direction.
Great stuff, QT.
Very well done.
Thank you.
Very, very well done. I have a caller. We'll give this a try before we go to our buy, sell, or hold. Well, let's see what the caller has to say tonight. Caller, you're on the air. Hello? Nope. Hung up as I picked up.
I was like, whoa, what
they
are you
had
doing
to say click.
See that? You scared him away.
I tried. Okay. Now, let's take a look at that stock spotlight. Is it a buy, sell, or hold for Tuesday? So that means we'll have two at stake Tuesday. Let's take a look, and I'm going to start off with Haas. I wrote you down first. You're first.
Me first, huh? Up big on Friday. You know what? I think we're gonna have a little pullback coming in on Tuesday. So I'm gonna say sell.
Sell. Okay.
Yep.
Siffy.
Well, normally I go sell.
Mm-hmm.
We all know that.
Mm-hmm.
Or hold.
Or hold. And I have had my buys. Let's not forget ATRN. Never going to let that one go. But I'm going to have to go with a buy on this one. I think there's more juice in the tank here, or gas, whatever you want to call it. But I like it, and I'm looking for a breakout on this thing. If all the indicators line up and the stars are there, get ready, boys and girls. That's just what I'm thinking.
Okay. Next up, QT.
I think I'm going to go with the buy. Everything looks like it's turning around and maybe a new direction. So buy.
All righty. Cut.
The Friday afternoon from 1400, she drives through the 30, right? Normal selling, and then drives again all the way to about 15:30, half hour before. Starts driving up again, breaks that 30 again, and then a little bit more selling, and then settles back down at the 30. Tells me that there's a whole lot of gas in here. I mean, when you're following the money on this, and you look at the RSI power zone and everything that's happening with the chart, and the players that are flocking to this thing now, they'll double it. I mean, they're going to drive this thing. So I am definitely a buy.
Definitely a buy. All right, and I'm going to add to that side and say buy. And I'd like to welcome Mr. Joseph Coffey to the chat room. You are 44 minutes late tonight, sir. 7 o'clock on Sundays. 8 o'clock Monday through Thursday.
And you know the funny part? That is the best chat guy there ever was.
Oh, yeah, he does a fantastic job keeping the chat room up to date on what's going on. Don't forget, Wednesday night, the ticker symbol everybody's been waiting to hear from, GRDO, 15 seconds of fame. Coming up, CEO interview. That's Wednesday night.
Sorry, Mike, I had to get some table pounding excitement in the background.
We all heard it. Smoke signals were going up. We saw it all. It's good stuff. It's all good. Monday through Thursday, 8 p.m. Eastern Standard Time is how you can catch Stock Traders Talk Radio. come check us out on our new, little buggy still putting some content in, but our new website, stocktraderstalk.com. Okay, so recap. We have 4 buys and 1 sell for Tuesday. We'll see how we make out on Tuesday. We're going to take a small commercial break right here. I'm sorry?
I was going to say, how could you be a sell after Cutie Cal just gave us that D&D report?
I know. That's
Hey, now,
hangover.
Great DD does not mean a stock's going to go up. Great fundamentals does not mean a stock's going to go up.
Sorry for interrupting you, Mike.
That's okay. All right, we're going to take a small break, and we'll be back with Surfing with Sifakia.
PennyChatterStocks.com, where our network becomes your game. There is no need for 6 or 7 sites to track your penny stock bugs. We've got chat, forums, blogs. You can integrate your Twitter, Facebook, Google+, MailChimp emailers all on one site so that your following comes with you. All it comes down to is the network, www.pennychatterstocks.com.
And now, a quick word from thepennybin.com. What does one penny say to the other penny? Let's get together and make some sense. Are you tired of losing your hard-earned pennies? Be sure to visit thepennybin.com and download our iPhone app where delivery of our stock plays right into your iPhone instantly. The time to start making money is now. Please be advised that you may make huge sums of money and that thepennybin.com will not be held liable.
I'm your host, STT. Joining me on tonight's program, I have Cop, Haas, Sifakia, QT Cal. Everybody make it back with me?
Oh, yeah.
Oh, yeah.
Oh, okay. I had a little pause there. I thought maybe I was going to finish out the show myself tonight. You all know I had a long night last night. Don't test me.
I saw you posting pretty late there, bud.
4 o'clock in the morning I was up till. 4 a.m. Back up.
Dedicated.
Wow. Back up at 9 this morning. Fighting the good fight. All righty. Let's move into the next segment of the show because I can't wait for this to be over so I can take a nap. Here we go. Surfing with Sifakia. And now here he is, Sifakia.
Aloha, STT, once again. Love that song, never gets old, huh? So I guess what we're going to look at is what we're going to be watching this week. I know we got the day off tomorrow, being President's Day, no trading. You will be able to trade you Forexers, the Asian and the European market, so actually be trading that today. I took the day off from that just because it didn't feel like it was on. But got the day off, and you also got the European finance ministers meet on Greece, yada, yada, yada. Hear about that on a daily basis, but it does move markets, so whatever. You'll hear about it on CNBC before you wake up on Tuesday morning. But as for Tuesday morning, 1 p.m. is pretty much your biggest economic data. You've got a $35 billion 2-year note auction, raising some cash, boys. Little dilution. And for the earnings, we've got Home Depot, Kraft Foods, Walmart, Macy's, Radio Shack. You definitely watch Radio Shack. We all know how they got beat up. You got Saks, Steve Madden, Cabot Oil, Chesapeake Oil, and Dell. So no shortage of bellwethers, energy, retailers. I mean, you name it. You got yourself a nice little slew of earnings there to get your day going on Tuesday. And then on Wednesday, you've got a ever important 10 a.m. existing home sales. That moves the market. You can play that a number of ways. Home builders, REITs, there's ETFs. But that does move the market. If not move the market, it sets the tone for the market during that day. At 1 p.m., let's do some more good old dilution. You got a $35 billion 5-year note auction. And we got some earnings. We got Hewlett-Packard, TJ Maxx, MGM Resorts. Keep your eye on that one. Limited Brands, Toll Brothers, the Dollar Tree, Express Scripts, Floor, Williams Company, Hertz Global. So, again, you got a whole mix. And this is just the ones that are, the top of the notch, guys. There is a lot of them. Yeah, Thursday. So, I mean, you can go to whatever broker you have. You can go to Reuters. You can go to CNBC. There's a lot of places to see the earnings calendar and the economic calendar. You can go to the NASDAQ because I'm just going over some ones that might catch your eye and you might want to play. It's going to have some volatility. It's going to be some money. And then on Thursday what we always have, and you can always count on setting the tone for the day, is your 8:30 a.m. pre-market weekly jobless claims. That's one that, you got to trade around. Then at 10 a.m., you got your FHFA Home Price Index, another one. 11 a.m., Kansas City Fed Survey. And then again, 29 billion 7-year auction. So it's printing all week long, guys. We're selling debt, whatever you want to call it. Earnings, you got Kohl's, Target, Liberty Media, Safeway, EchoStar, Foster, Dish, Wheeler, AIG, Cap, Salesforce.com, HealthSouth, TiVo, EchoStar, Hormel, Live Action. So, again, packed, guys. It's going to keep going on and on. And then, of course, we all know what's going on with this market, the grease thing. We're up, we're down, they're settling, they're not. You see the VIX going crazy. We talked about it before it went crazy. We called out TVIX at 14. The thing ran to almost 24, 25, I believe. That might be a little high on my estimates there. Sorry if I am. But anyways, it went crazy, and now they're even talking about it on CNBC. Go figure. So Herb Greenberg, good to you, my brother, because it should be talked about. And you're right, it is for sophisticated investors. So beware. Even though I do mention it, I know that sophisticated investors listen to this show. So enjoy that one, DVIX. Keep it on the radar. Friday, 9:55 a.m., consumer sentiment, guys. This is important, even though if you look up the definition of it, you go, are you kidding me? It don't matter. The street watches it. And then at 10 a.m., you got the new home sales, all right? This isn't no joke. And then, we got our St. Louis Fed, James Bullard, and San Francisco Fed President John Williams on the housing and monetary policy at the University of Chicago Booth School, all right? So that is what it is. And also at 1:30, you've got the Philly Fed, Charles Plauser, and New York Fed, William Dudley, on the fiscal challenges. That's pretty funny. At the University of Chicago Booth Schools, same place, a business interview on global markets. So Friday's going to be interesting. It always is. You got to love it. J.C. Penney's, Newmont Mining, Washington Post, Telefonica, Pinnacle West. So that's basically what you're looking at for the week, guys. Hopefully I went a little slower that time. Mike told me I need to take it down about 5 years. So hopefully that was a little better. Mike?
That was good.
That was it. That was what we needed.
That was
all
awesome.
right.
Good job, Sissy.
I feel like I'm at an auction. $5 sale. Buy. No.
Yeah.
I hear you. What's that, the disclaimer? These are only our opinions. Do not do anything we say. Ever.
I'm not a professional. I'm a surfer bum that loves trading. And one day maybe I will be a professional and I can charge you for this crap.
I don't know, Sippy. You sound like a professional to me, bud. You kill it every time. It's awesome stuff.
Yeah, man. Somebody else comes up with stuff. We're reading it. We're watching it. It's all given to us. None of us really need to look for it. It's right there in front of us. just know what you're looking for is the big point, you know.
Mm-hmm.
So
very good, very good.
I think we were out of time for the stock spotlight, possibly.
Yeah, I had we got about 5 minutes left. You want to try and squeeze in the top 10?
That sounds better.
You got a top 10 that you could squeeze in for us?
I can try to run through it real quick.
Yeah, let's run through.
Let's hear this rattle.
The top 10 buzzing on my hub this weekend. Haas, go!
All right, wasting no time. Not going to waste much time on number 1, Paychest, ticker PYCT, trading at TRIP01. Been trading there for a couple years. Basically, their product is just got approved or registered with the FDA. They have a flush away women's sanitary napkin product, but massive outstanding share count, 27.7 billion shares. Apparently they're doing a buyback, 300 million shares so far, which doesn't even make a dent in that. In my honest opinion, just stay away. All right, moving down the line, we got BCAP. Talked about it last week, Baron Capital. They opened up their own little transfer agency to create a better market for some of these penny stocks that are having issues trading. They're bringing a couple companies, private companies, public, and they just had a CC on Friday. I suggest you go check out the iHub board if you want the information from that conference call. On Friday we had 169 million in volume, minus 16.67%, trading at TRIP05, trading range TRIP04 to TRIP06. There's been some major accumulation going on in those low trips, so it's one to keep an eye on. Trader stock right now, but as they ramp this transfer agency and start bringing in revenues, the company could become a little more significant. Moving down the line, RTGV, we just went over that, so I'm actually going to plug in my own ticker, DKGR, Drake Gold Resources. Traded 41 million volume on Friday, broke out in a big way, plus 78.13%, trading at 0057, trading range 0032 to 006. Finished near the high of the day at 0057, so the accumulation is still high there. They've recently made some management changes, and I would expect some more news coming in the near future. I would definitely read the bios on the management that they just put in place too. It's pretty good stuff. It's one to keep an eye on. Moving down the line, WAMUQ, WAMUQ, Washington Mutual. It's been in bankruptcy forever, Chapter 11. 15 million volume on Friday, plus 7.66%, trading at 4.5 cents, trading range 3.95 cents to 5.8 cents. On February 17th, late last week, they extended the release deadline to March 7th, 2012 for holders of preferred and common stock in connection with the company's 7th amended plan of reorganization. Like I said, they've been in bankruptcy forever. They keep modifying the plan of reorganization. No one knows if common shares are going to be, get anything at the end of this reorganization process, but people like to speculate on these cues. So it's one to keep an eye on. It's been a trader's paradise over the last, year or two here as it makes wild swings on news like this. So it could be one to keep on your radars for a nice little bump on that news as that March 7th deadline approaches. And next one, JBI Inc. They have the plastic to oil conversion system. 90 seconds, apparently. I'm going to start hurrying through this. 68,000 volume on Friday, plus 1%, trading at $1.74. They're bringing that plastic to oil conversion system to the market later this year, and they'll start, bringing in some revenues. Again, this stock is a trader's paradise. I think we spotlighted it on the show at $1. And now it's trading at $1.74, and volume continues to come into the stock. I expect a big move as the year moves on here. Rapid Fire Marketing, ticker RFMK, 67 million volume, minus 32%, trading at 0031.
Thank you for listening to Stock Traders Talk Radio. All views and topics talked about on Stock Traders Talk Radio is solely for entertainment purposes. We are not professional financial advisors and always recommend you seek the advice of a professional financial advisor. Never invest in any stock featured on our show unless you can afford to lose your entire investment. The information contained on our show is based on sources which we believe to be reliable, but is not guaranteed by us as being accurate, and might not be a complete statement or summary of the available data. Stock Traders Talk Radio advises that the investments in companies profiled are commonly considered to be high risk, and use of the information provided is at the investor's sole risk. Thank you for listening to Stock Traders Talk Radio.
Aloha.